Everything is being driven by secular forces: debt, demographics, deflation, technology, globalization. That is macro. And an outcome of that was cryptocurrency. It was specifically designed to get us around the problems of the financial system. That has now become broader, and it's offered itself as a solution to the macro problems that are at hand. The world's most indebted economy being the US, the most indebted global economy in world history, and all of the issues that we face, this demographic bust that's going on, and also dealing with globalization at scale and technology. But then technology keeps rearing its head because it is a huge driver here, because it's replacing jobs at an alarming rate. It is also creating opportunity at a rate unprecedented in all human history. So all of these things are combining to create the exponential age, and the technology in the exponential age is a bunch of network adoption models, all combining in their own network adoption exponential trend to create this whole period of time. The next 10 years will be the teeth of this thing, where we're going to have to go through change that is unprecedented. Everything from genetic sciences to EVs, to green energy, to robotics, to distributed computing power, to the Internet of Things, through to 3D printing, AI, space travel, all of this. 5G, space Wi-Fi. I mean, it's basically all the information layer coming together. Even genetics is now an information layer. It looks very similar to modern software. You put all of this together, who knows where the world is going to lead. But it's going to be scary and difficult to navigate for us socially. But if we embrace it, we can also make a lot of money from investing in it. In the macro hedge fund world that I grew up in, it's a pretty savvy bunch of people. It's now considered a stigma. You're considered prehistoric. When John Paulson came out 2 days ago and says, well, I think it's all worthless. I mean, basically the whole macro world was like, really? And we're talking every legend of the industry is long this stuff in significant ways, both personally and in their funds, and are scaling it up. So yes, I mean, you're basically a social pariah now if you haven't got it in. Much like systems-based trading. When we started Real Vision, it was like, oh God, no, those guys, this is the end of the world. 7 years later, I mean, it's just part of our world.
Yeah. Raoul, I've got to ask you a question about the macro world, returning to that world. You have a report out off of Real Vision Pro, where I believe the cover of it is a series of snails, and that is talking about the economic slowdown. Tell us what you're seeing there in the data and how you think it might impact asset prices.
Yeah, and I've been talking about this in the daily briefing, shuttling everybody along every kind of 3 weeks or so, is the forward-looking data in the United States, China, Japan, and a few other countries is slowing significantly. The Citibank Economic Surprises Index of data in the United States is now firmly negative. It's firmly negative in China, and it's about to go negative in Europe. So the data is not as good as expected. Then when we start looking at like buying climate from University of Michigan, the worst ever in recorded history, buying climate to buy a house, a car, durable goods. We're seeing a whole bunch of stimulus roll off in the next week or two. So some of the moratoriums on rent and a whole bunch of things all stop. Payments, transfer payments, all stop. We're seeing it in the bond market, where yields have started slowly coming off and have been coming off for a long time. When everyone was screaming inflation, the bond market was like, it's not the issue. It is normal to have, after a recession, a period where there's excessive optimism of economic recovery, and the economy's just not on its 2 feet yet. It's like coming out of hospital after an operation. You're not going to go around the block having a jog. You might put 3 feet in front of each other, and everyone goes, yeah, see, he's back to normal, and he collapses on the floor again, and he's go back to bed. We've all been there. It's the way with the hangover, right? You think you can survive it, but it actually takes another day. It's exactly the same with recoveries. And we're not there yet. So we will, and David Rosenberg's been talking about this, and a whole bunch of people, Jim Bianco, is we are likely to see the economy, the global economy, slow more than expected. I'm not talking about another recession, but I think it probably ignites asset prices again. Because if you even get a sniff of a slowing economy and the Fed aren't going to taper, boom, up goes the tech stocks, and they look already like they're about to do it. Crypto's just exploded higher. This is the world we live in. And a lot of people don't like it. They shake their arms at the internet saying the Fed should raise rates. That's not the game we're in. The game we're in is, this is what the Fed do. How can I take advantage of it? And they've given you free options. Just take them. So I read out a bunch of changes in the key instruments from 7 years ago to today. If we are truly going into the exponential age, then we're going to see some extraordinary changes to some of those numbers. I don't know what they're going to be. My guess is oil is lower as opposed to higher over the next 7 years. I'm not talking about short term. My guess is bond yields are probably lower, not higher. But who knows? That'll be the big fight the market wants to have. Gold is probably a lot higher. Where the dollar is, who the hell knows? Where Bitcoin is, that is going to be fascinating. And where the NASDAQ is, that's probably, again, the outlier here. Because if these technologies are truly happening, well, that's going to return a lot of money to people.